Hello, my name is Eddie Tofpick. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited, and here is your weekly technical analysis of Paris milling wheat, Minneapolis wheat, and London, UK feed wheat. Paris milling wheat. Much as Chicago and Kansas City wheat, this market is a story of three patterns, though not necessarily channels, and also not necessarily the same results. I'll explain. The first pattern, and the largest, is the late June to early September bear channel that morphed into a descending wedge pattern. Then there is the dark blue highlighted early September to mid-October expanding wedge pattern. And finally, the most recent and shortest pattern is the dark blue highlighted mid-October to mid-November that, together with the expanding wedge pattern, made a V-top pattern. Last week, prices here were progressing down this newest of bear channels without much of an extension or handle. The significant and now flatlining medium moving average currently at 227 and the long moving average currently 228 and starting to stabilize below them. However, we have significant supports further down, specifically the May 2023 low at 221 and especially the 50% absolute Fibonacci line at 219. And it was amongst these that prices turned early this week, breaking higher over the newly formed bow tie formation of moving averages. I'll speak about those in a minute. And up now to test the slowly rising short medium moving average, currently 232. We left behind potential target below for the early September to mid-October rising expanding wedge pattern. Primary target X in the 217 zone and the secondary harder to reach target X1 down in the 208 zone. Interestingly, I said last week, and I quote, I suspect the best supports for this market are from where we are now down to the 50% absolute Fibonacci line at 219, and that it might be easier to reach target X and target X1 should prices manage to drop below the 50% absolute Fibonacci line. We'll see if this comes about should prices venture that far down, end of quote. Well, my thoughts about the 50% absolute Fibonacci line and the supports above it turned out to be true. But I'm beginning to wonder just how much bullish incentive there is in this market, as prices are having an issue yesterday and today at the short medium moving average. And further overhead is some significant resistances, specifically the neckline extension to the June to November 2023 head and shoulders top, currently at 237, and the 238 to 247 congestion area, containing the March 2013 high at 240 and the February 2013 high at 247, and also the October base congestion between approximately 237 to 245 that was caused by the previously mentioned congestion band. Additionally, there is one other pattern you should take note of, and that is the bow tie formation, made on Monday this week by the short moving average, currently 227, the medium moving average, and the long moving average. Now, the moving averages went in and out of the bow tie in the right order, which is usually a minor miracle. But whilst the way in looked a clean move lower, the way out has been messy, starting to look higher. I'm reserving my judgment on this part, but I can suggest that approximately 15 to 20 sessions after the crossover, look to see some volatility in prices and maybe direction. So watch out between the 16th to the 20th of December to be sure. Minneapolis wheat. The market here is a little different when compared to Chicago, Kansas City, and even Paris wheat. You see, the core recent pattern is a very large one, a sideways expanding wedge pattern highlighted in dark blue on my daily chart, currently 554 to 695. Now, this pattern is still alive, and there's also a much larger pattern as well, one I've been discussing in my commentaries here for months. A descending expanding wedge pattern, currently 644 to down well off the bottom of my daily chart. The upper trend line has been escorted and reinforced since at least late last year, though not very well, I have to say, by the declining long moving average, currently at 648. I've kept this breached large original descending wedge pattern still on my daily chart, as the others that were here originating from August, September and October 23 through to April 2024 have all been thoroughly broken, and this, the largest one, is still here, even if it was previously breached as a just-in-case situation. Now, going back to the market action, prices turned higher from a small V bottom in late August, prompted by the purple highlighted September 2019 to date uptrend, currently at 598, into an early September to mid-October scrappy-looking ascending expanding wedge pattern. Unsurprisingly, this peaked in mid-October and was capped by the combined upper trend line to the expanding wedge pattern that was also the neckline to the inverted February to June head and shoulders pattern, thus turning lower and creating a bright red October to date based bear channel, currently 571 to 608. This turn lower did not quite have the integrity here for a V-top as seen in other weak markets, but the bear channel, despite some other grain markets heading higher this week, still looks good, despite seeing some hesitation over the last week of October and the first week of November. Last week prices punched lower, dropping down through the October 2018 high at 611, the April 2021 low at 606, and importantly down through the purple September 2019 to date uptrend, making a second consecutive close below it. In doing so, the outstanding primary target for the September to October base small ascending expanding wedge pattern was achieved, but the hardest to reach secondary target X1 down at 563 is still alive. Last week it looked like it was only the bright red lower bear channel line and some congestion at 579 that stood in the way of testing down to the August low at 563 and to target X1. However, prices chose a different way, moving up over the purple neckline and up to test the bright red upper bear channel line. So far, this has held. And we are seeing the market getting squeezed like a toothpaste tube in between the overhead bright red bear channel coming down and the purple neckline gently going sideways. Something is going to have to give way, and it will be soon. I would imagine early next week. Right now it is beginning to look like it might just be the purple neckline giving way again. London UK feed wheat. Until this last week there had been two competing patterns here on this daily chart that were fighting for the future of this commodity. There was the original significant early March to late June bullish Andrews pitchhawk, the combination now broken lower time currently at 181.30 and the flatlining long moving average currently 179.35, originally acting as supports and now seemingly getting used to acting as resistances. To be honest, prices have been testing these supports, or at least threatening to test these supports, since late August. Then there is the now more significant recent pattern. The bright red late May to early July bearish shift pitchhawk, with the market right now in between the upper time above, currently at 188.25, and the middle time below, currently 170.45. Now, I have said for months that the gold long moving average and the lower time of the bullish shift pitchhawk were the last bullish orientated supports I had in this market. And 2 weeks ago they were broken, with some further exploitation since, though not by that much. Okay, so looking at the early October actions, what may turn out to be the key feature was the island top over early to middle of October, with potential target X below in the 169.90 zone. This island top led to the purple highlighted October to mid-November bear channel, which we exited out of the top of, though not necessarily that convincingly, this week. I voiced some doubts actually about this bear channel the last few weeks, but I also said I would go with it until something better comes along. I'm now looking for that better move or pattern to appear. As for target X, well, it did look a little optimistic when prices were above the broken lower time of the bullish Andrews pitchhawk and the long moving average. But as I said 2 weeks ago, and I quote, that is because I'm looking at it from the perspective of being above the dark blue lower time and the flatlining gold long moving average. Should these two give way, then it would gather a completely different perspective. So it's important to see if the last chance bullish supportive pattern manages to hold up repeated attempts of breaking lower. End of quote. Right now, these two have not really managed to do so, to hold up the market, even with the higher prices seen this week. Hence, look out for what may be next, and failing that, look to the bright red bearish shift pitchhawk to show the way, for now at least. Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpick and ADM Investor Service International Limited. And here comes the final important bit.